10-year futures of the yields here, and we look at this consolidation that it's been in here, it's barely been between like 114, I want to call it 15, and kind of 117 or so. It's holding its 200-day moving average. I think you and I can both be in the camp higher for longer with the Fed funds, as the Fed wants to kind of maintain their vigilance with inflation. But 10-year yields actually don't have to rally with it, right? And if you think about that, and so I'm in that camp here. I think this sets up as a pretty decent trade in the futures, guy. And again, one of the reasons why, especially on Tuesdays when it is CME day, we like to kind of focus on the futures markets is because of the liquidity, because of the ability to risk manage the positions, right? And we can set our target to the upside, but we can also put stops in place here. And so as I'm looking at this, I think that we are going to start to see weaker economic data in the face of the Fed keeping Fed funds higher, which I believe is going to mean weaker yields in the 10-year here. Okay. And so if I think about that, I mean, I want to play for a move in the 10-year note, which is the opposite, right, of which direction the yield is going. So if we want to flash back and forth, we'll look at this right here. I want to buy this at 115.5. I want to stop it at that April low of 114.15. So that's a little over 1% to the downside. You can see why I want to stop it just below that 200-day moving average. One of the reasons why we like to place stops a little bit above or below those sort of technical levels is that oftentimes a lot of traders or market makers, they'll look to take out stops that they think are at very obvious levels here. So I'm going to stop it down there at 114.15, and I'm looking to play for a move back to 120, guys. So when I think about this trade idea here in the 10-year futures here, I'm like risking one to possibly make 3 or 4. I like the risk reward here, and I like the way it fits into my broader narrative about the macro, about the way the economy is slowing and how to express this. Because right now it's been a hard way to do this in the equity market. You could look at Russell 2000 and down in the year, you could say, well, that's been one good way to see this simmering weakness that's kind of like a slow burn, I guess, if you will, in the economy, and that's how it's reflected in the stock market. I think the 10-year note rising and the yields going lower is another way to do it.
You got a tight leash on this. I think it's a good chart. If you could, again, toggle back, that's a Carter Worth phrase, bingo for somebody out there. But if you go look at the last chart, you'll see, I mean, it's structured the right way. I mean, your stop loss level is exactly right. And again, if I don't know what the market's going to do. We're very clear. We say it all the time. I mean, the market has a way of humbling us all. But if the broader market does what I think it's going to do, in other words, sell off in a pretty meaningful way, I do think you'll see a flight to quality in the form of bonds, which means yields go lower and Dan trades work. So if you go to the parameters that he set forth, I mean, it makes a lot of sense. You have a tight leash on this thing in terms of the stop loss level. It makes sense because you saw days like yesterday where the bond market got throttled seemingly out of nowhere. So you could have a day like yesterday, it could take you right out of it, but at least you have a tight stop. But if you're right, 3-4 to 1, that's typically the right ratio for these trades. You never want to do something risk one to make one, sort of a 50-50 bet, because you have no edge really. You're flipping a coin. But when you think things are stacked in your favor, and you think it can be a 3 to 1, 4 to 1, that's the right time to put it on. So I do like this trade a lot. I think your levels are right.
Yeah, and the other point is if it starts going in your direction, you continue to raise your stop, right? So you lock in whatever profits that you have. You kind of get that stop tighter.